Welcome to Banking Gyan Kendra. In this video, we shall be talking about the CRR, that is the cash reserve ratio. In what way is it important to RBI and how does it work? Now, before we come to know what exactly is CRR, we need to know about the net demand and time liabilities, that is the NDTL. Now, two words are associated with it. First is the demand liability, next is the time liability. Now, let us first understand what liability is. Now, anything which is being borrowed and has to be returned back within a certain span of time, so that is called a liability. On the other hand, assets will be anything which is of your own, your mobile, your laptop, for instance. So those are your assets. Now, if we relate this in banking terms, okay, liability is, say for example, if a customer approaches a bank and he opens a savings account, a current account, a fixed deposit, a recurring deposit maybe. So these are the liabilities of the bank. The bank needs to pay it back to the customers. Okay, on the other hand, assets will be all the deposit which has been collected from the customers is lent to the customers in the form of loan. So those are the assets of the bank. The loan may be any kind of loan, car loan, home loan, okay, for instance. So these are the assets. Now we come to what is demand liability, what is time liability. So the savings account, the current account, they come under the demand liability because we need to pay this on demand of the customers. For instance, if a customer has a balance of 10,000 in his savings account or in his current account, and at any moment of time he wants to withdraw an amount of 5,000 from that account, he can withdraw. So bank has to pay. So that is a payment on demand. So that is called the demand liability. On the other hand, fixed deposits and recurring deposits, they come under the time liability because they have been invested in the bank for a certain period of time. For example, say for 1 year, or RD say for 2 years, anything. So it is invested for a certain period of time, and on maturity we pay that amount to the customers. Now both CRR and SLR are both dependent on NDTL. Now CRR at present is 4.5%. Now, what exactly is CRR? Under CRR, we can say a certain percentage of the total bank deposits, all the bank deposits which has been collected from the customers, a certain percentage of it is to be kept with RBI in the form of cash. So this is called the cash reserve ratio. Now, at present, cash reserve ratio is 4.5%. So what amount is kept out there? 4.5% of NDTL is kept with RBI. So this is called the cash reserve ratio. It is mentioned in RBI Act section 42. But RBI does not pay any interest on the cash which has been kept with on the cash which has been kept by the banks with them. And this CRR is maintained on a fortnightly basis. I hope it is okay.